Wherever you want to sit, free country. Good guy. All right, good. We're going to make this a little more entertaining. You're going to be, I made it beautiful.
What is this?
You're going to be my telco CEO.
Heaven forbid.
Who are you going to be? You're going to be my telco shareholder. Great. Okay, and you're going to be the CPaaS player, right? So beautifully written. Okay, so we'll come back to that one. Already think about it because there's going to become some points on that one. We got to be agile on this part. First, what do you bring to this panel? Why are you here?
So look, I think I can bring a kind of corporate telco investment angle. So we're relatively acquisitive. We made 14, 15 acquisitions in the last 5 years.
Okay.
Predominantly buying a mixture of kind of regional footprint and capability.
Good. I think approved.
Am I speaking as a shareholder?
No, sorry. Now it's still you.
Am I in my persona
We're not yet
yet?
in that role.
Okay, fair enough.
I give you the snippet, and then you're in your role.
Okay, good. Dan Phillips with Sandbox Industries. We're a venture capital firm. We form and operate venture funds across 4 sectors in partnership with large companies operating in those sectors. And the idea is to invest in emerging, innovative companies that can partner with our corporate sponsors and drive business value as well as the financial value of startups growing and being successful.
Cool. Approved.
So Mark Castleman from Intel, and I think for this panel, I was previously a founder, started several software companies and computer hardware companies, crash burned several of them. Over the process, raised well over 100 million just for my own companies, and then became an investor and investing partner. And for portfolio companies, have probably raised about 500 to 700 million of new capital and created several billion in enterprise value. But along the way, it has, and I was doing corporate innovation at Bell Labs and with, crazy rich investors trying to do crazy things and moonshots and that sort of thing. And so there's definitely a pattern of things that work. So you can do sort of a patterned approach to innovation and growth, and you can do the outlier approach. And so, how capital seeks return and how investors or how entrepreneurs seek validation often are very different. So to align those things together.
You proved yourself. You can mic drop. You got me at the first numbers. I think we're good there. Why do we need a panel on this one? So what's the real issue that we are facing? Why do we need to talk about? Why is it not obvious? Okay, investor capital will be growing. We see that one. So why do we need it? What's the issue we are trying to solve?
I think that one of the challenges we certainly see is we've got a very clear strategic kind of direction of travel. We know what we want to do. We're a growing business, but I think finding businesses and capability that isn't, I guess, mainstreamly available for us is a bit of a challenge. We know where we want to go, but we don't always know where to, potentially invest, where we can accelerate that strategy by investing in smaller businesses that take, where 1 + 1 = 3. So I think for me that's kind of the missing part here is how do we bring together the kind of wants and needs of a relatively mature kind of capital markets business and then take that into the entrepreneurial area.
Okay. What do you see? Because you're coming from a different, you're new to this industry,
yes.
So welcome.
Thank
you. What do you have seen also in other industries? So what is it? Is there so much investment that goes blah and it's gone? Or where's the challenge? Because you also have a reason why you exist, right? And you exist because they cannot get it done themselves. So what cannot they not get done?
It's not that they can't get it done themselves. I think it's that a well-rounded corporate innovation strategy has to involve both kind of the internal efforts and the external-facing partnerships, especially in complex, highly regulated industries. So one of our initial investment funds that we formed back in 2008 is in the healthcare space, and we have 30-plus health insurance companies in the U.S. as partners in the fund. Any one of those 30 companies might have 5 million members and $10 billion in annual premium value. These are monster organizations. And the prospect of starting something new internally unburdened by some of the existing systems, legacy technologies, as well as the regulatory component, oftentimes stifles those new efforts. So having partnerships with smaller private companies that can be a little bit more nimble, a little bit more risk-taking, requires putting capital behind them to get them going. And it creates an opportunity for these large companies to be an initial customer, be a partner and equity holder in the development of that company that brings value.
Okay. Mark, I'm going to give you a challenge, right?
Yeah,
no,
sure.
don't want to answer.
No?
it.
Okay.
So you get a new question. Sorry, you get a new question.
I'll take a new question.
So I say telcos should not have CVCs. It's my part. So I think they should not. I think they've proven that they cannot do it. And I think the strategic challenge, or the challenge of combining strategic with business impact together. So a strategic investment is the high end, and the majority of corporates are not there and will never be there to enable that one. With Intel, of course, you have the investment. So should they, or what? When should can a corporate really have a CVC and combine the financial and strategic value in one?
Well, without speaking about Intel Capital specifically, I would just say that large systems, and telco is basically a large system organization, are designed to improve what they do. Okay, and that is a different model than innovating some kind of deviation, and so. You don't I'm a big believer in system theory, which is like you get the perfect output of your system. Every output is a perfect output. So if you want a different output, you actually need a different system. You can't modify a system. So you can't put ice cream ingredients into a meat grinder and get ice cream, and vice versa. So you need a different system. And one of the reasons that CVC struggles is it's still tied to another system with a different agenda. So it has to be separate. And that's just fundamental. And there's been so much effort to try to infuse a sort of innovation programs into these large systems, and they don't work because somebody mentioned the antibodies. That's also a good analogy, or metaphor. But I think that separating them and demonstrating success in the specific thing that they're trying to do, which is generally a deviation, not a modification, is where you need to innovate.
But what is the success in this regard? Because if you're kind of strategic, I can invest and say how many telco CVCs were set up, and again, many of them closed down. If we look at that, okay, I'm going to go strategic, and I'm going to invest in the things that are 5 years out. Okay, I'm going to build the new telco. That's what I'm going to invest in. Zero value for the core business, and at the end of the day, it's a financial vehicle because you're investing from a financial perspective. I can invest more short term than I have the success. What is it when they collaborate with the core?
Well,
so what is success?
By definition, you have to invest in a category or a market that doesn't exist or support the investment, and so it's a conundrum. A system like telco.
It's working. Yeah, it's on.
Is it working? Okay. A system like telco, which is designed to improve, invest in known outcomes. Okay.
Yes.
But by definition, if you're investing in innovation, you have an unknown outcome. So you're spending money absent the promise of a return you can't calculate. And so it's a no-go. And frankly, it's impossible. You can't make that prediction. So you have to bet. And large systems that are improvement-oriented don't make those kinds of bets because they don't make financial sense.
Okay. Let's take your role, okay? Telco CEO, telco shareholder, majority, like a significant shareholder, not just anybody. And you're more from the CPaaS player. Because we just have not too much time. What is your top? If you were a telco CEO of a major telco, what would you do? What would be your preferred? I'll ask each of you. What would you do really on the innovation topic? Would you set up a CVC? Why? Would you set up an incubator? Why? Would you just do it in-house and build up actually R&D capabilities? What would you do?
I mean, it's a really interesting conundrum, that, isn't it? And I think
it's not an easy.
Yeah,
Yeah.
just chuck that one at me because what you're saying, pretty much every telco once failed. So chuck it at the CEO. I think it's. What would I do? I mean,
You can start chipping in if you have great
This-
ideas.
this
How
is
to
probably
solve
my-
his innovation dilemma? How do you, as a telco today, you are a CEO of a telco. What do you do?
I mean, so the approach we've taken is broadly to kind of invest in your own internal labs capability, but with an exception that you look at some of the smaller capabilities that exist out there and then try and augment that into a kind of an organization that allows you to do some of that differentiation. So it's I guess you'd call it a hybrid approach, which is a kind of take all the good stuff and innovation that you want to drive, but then take as much sort of outside perspective as you can to allow you to try to make the right decisions.
Would you, yes, no question, a show of hands actually, would you as a telco CEO set up a CVC?
No.
No? No? Okay. Would you invest in other funds?
Yes.
Absolutely.
Oh, wow, what a surprise.
100%. In fact, instead of, because look, if I'm not in the business of making bets, well, how am I suddenly going to be successful in a CVC making bets and deal flow that I really don't have access to? Probably not getting the best deals at the best price point. So why don't I put that money into someone else and allow them who do it very well to get in those deals and set a side letter if I want to make some future investment. So to me, that's smarter. And look, the goal, typically the goal of the CVC is not really balance sheet return anyway. It's really access to innovation. So why not take that capital, spread it around, expand your access to innovation, and then pick and choose from the winners? It makes a lot more sense, and the economics are very clear. CVC is not very good for most balance sheets.
Okay. Let's move to the shareholder, all right? Actually, sorry, you had a...
No.
That was not a very good CPAS response. I have a better response for CPAS. I'll turn that around in a second.
We'll go to the shareholder. Now, you're a telco shareholder, right? Shareholder, as the telco, and I think if you speak to any telco CFO, you would say, look, at the end of the day, my shareholders pressure me short term. I'm, utility business, giving my profits. I run decent margins, getting more and more challenged to that one. I don't really have a great history of proving that I can do new stuff. So as a shareholder, what would you do? What would be your, how would you look at that one if you're a major telco shareholder?
Yeah, I mean, I think that I'll give the boring response and say that my focus is going to be on growth and margin, and my frustration is going to be that we as the telco have built and are building tremendous value and infrastructure that all of these other players are building on top of, and they're the ones that are capturing the 90% gross margin, the monster valuations, and the giant exits. And so my focus is going to be how can we tap into some of those applications and capture some of that value in a differentiated way.
So then I would say, so if I take now the other shareholder, we're in a boardroom, and I would be saying, the same shares, right? And I was saying, I haven't seen any traction of them. I just take my money and invest my funds directly. Why do I need you as a telco? Why don't I do it as me as a shareholder? I invest. Give me my dividends, and I invest my dividends the way I think it's best, then you do it as a telco. Where's the benefit of you investing in it?
I'll give you
Go
that.
ahead, jump
Well,
in.
look, I mean, if you look at telco market caps and investment kind of velocity, it's pretty low. Okay, so to answer your question, a lot of whether it's retail investors or big money investors aren't investing in telco because they're slow growth businesses, right? So they're going to invest in something else. So it sort of answers your question, capital seeks return. And one of the reasons that it doesn't necessarily go into these kind of large ecosystem businesses is that they are kind of slow growth. They're more like an annuity. They have to pay a dividend. So capital is being taken out of the businesses regularly just to attract the investor. Well, if you take a bunch of money and you stick it into high risk, low promise investments, the shareholder could look at that very negatively. That's cash that should be coming to me as a dividend. So I think from an investment thesis, it's telco has a difficulty. But again, back to what I was saying earlier, if you take that capital and you smartly spread it across an entire ecosystem, then in small amounts in lots of places, what you really want is visibility. You want clarity so that you can reduce your risk on your 5-year horizon. That to me is smarter than trying to drop any amount of money into a few deals.
In order to then be able to capture that benefit of I spread, I have visibility of access, what do you need internally in order to absorb it? So what's the counterpart, right? It's not going to be the CEO sitting like, hey, good, what do you guys? No?
Yeah, I mean, just to follow up on that, you have to be able to tell the difference between winning and losing. And so if you don't have that vision for it, you could see a win and it won't look like a win, and you'll pass anyway. So you've got to bring in people that understand the difference between winning and losing in a certain category, and they understand that outcome. That's hard. I mean, it goes down to people. It's really hard. It's not really a numbers game at that point. It's really, really hard. And so accepting the fact that as a CEO, you may not have that skill or that vision or that mindset is probably a human problem. But if that person can do it and bring in those people, you can get monstrously big wins and gains.
Yeah, Dan, because I think
Yeah.
keen to hear from you. What do you recommend your other LPs who are investing into your funds on the corporate side? What do they have or need internally in terms of to absorb that innovation?
There needs to be a structured process and organizational buy-in at all levels, including the CEO, frankly, that persists over time. We see a lot of turnover in these organizations sometimes, and I think those that are successful have kind of an organization-wide commitment to and a process to partnering with external parties, and not just the big vendors, but startups as well.
How is that measured, right? So what's corporates, we like to think in KPIs.
So for example, even before you get to KPIs, it's having a different contracting process. If you look at the contracting process for a large health insurance company that's got a $200 million annual contract for their core admin system, that is a different RFP and contracting process that could take 2 to 3 years to select a vendor and another 3 to 5 years to actually implement. That's not how you work with a startup, right?
agree.
So you need to have, and we see organizations that try to take a one-size-fits-all approach to how they work with external parties. You have to have a dedicated, different approach that works with startups that then gets to your point around KPIs of having, it's amazing the number of times I see a pilot or proof of concept in which the endpoint in terms of time and outcome has not been defined at the outset, and you get 6 to 12 months into a project, and there's no actual way to determine if that outcome is being met because it's not being measured properly.
Yeah.
The startup doesn't know what's going on, and the thing just dissolves.
This question of kind of using a word which I don't use, right? So we're Matchmaker Ventures, we work with the tech ecosystem, we scale companies. I would never say to a telco CEO, you work with a startup. It's a red flag. It's an absolutely red flag for them, in my view, in my experience. At least scale up or tech company, because it shows more proof. Startup, way too. There's a lot of risk. Those guys, the garage. Just wording. I think that's. How do you perceive that?
Yeah, I think I agree, and I think the kind of a lot of it I think depends on the kind of mindset of the CEO, right? So if you're a CFO originally who's gone into a CEO role, you're likely to be more focused on the numbers, and I think that definitely has a different outcome in terms of risk profile and how you want to invest your money. I think if your CEO is a bit more entrepreneurial or is a bit more tech focused, you may well find that that's the case. I think the red flag thing's really valid, and I think one of the challenges really is that kind of cultural clash between where a telco wants to build everything to absolutely scale from day one, and it needs to do it in a low risk, high compliance environment. I think that's pretty alien to many startups and scale ups, and having to kind of manage that cultural challenge is a real issue for people looking to onboard smaller providers into their ecosystem. And to be honest, we've kind of got the scars to bear that to an extent where you want to go with something funky and innovative, and it ends up biting you because it can't scale to the levels that you want to scale it to. Yeah. So I think that's a pretty important part.
It is very important, but it goes the other direction as well. A lot of startups are not prepared to deal with large-scale organizations that have real needs for process and control and certainty, because the customer is demanding it. And so look, if your network goes down for minutes, you can calculate your churn by the minute. And so startup with no customers doesn't understand that reality. It's serious business, okay? And so one of the things that I do when I'm working with startups is they need to stop acting like a startup and start to anticipate what it's like to be a grown-up. And I think Steve Blank says, what is a 6-year-old startup? It's a startup that's been failing for 4 years. So you don't want, the goal is not to stay a startup. And a lot of people talk about startup mindset, and I get that, and I've been there many times, and it's about being able to think in a deviated fashion against the norm. But behaving like a startup operationally is not the goal. Yeah. So it does go both ways.
I agree, fully agree, couldn't agree more. We still need to get into your CPaaS.
Yeah, the way I would.
Now you're a CPaaS CEO, so How do you approach the topic? Innovation, investments. What do you do? as a CPaaS player?
My goal, and this is a sales motion right here, is that my goal is to talk to this guy because he spent so much money on his infrastructure. He's so worried about monetizing that infrastructure because all of his ROI calculations are built on that kind of growth. The thing that I'm going to do is I'm going to go to him and say, I understand the outcome that you're trying to achieve, and if you work backwards and you allow me to, come and join you in your objective, then I will help you achieve your objective with X% additional growth. I would define it, okay? And I would challenge myself to that goal with that person and say, I'm going to do this with you. And okay, so if I'm a startup CPaaS, I'm going to sell a little bit differently than if I'm let's say a more incumbent-oriented CPaaS. But I'm going to try to align very, very specifically with their outcome goals. I'm not going to go in there and say, hey, if you adopt these 400 things, you can do more work. Like, that is the worst form of it. So I have to do the work in advance, and I have to know where they're headed, and then I have to go on that journey with them versus sending them down the road with like a pocket full of more tools and more headache.
Fantastic. Gentlemen, I'm gonna leave us here. I really enjoyed it. I think high impact. I like the energy in that one. Thank you for playing along. I hope you got some insights out of that one, some thoughts on how you approach this topic. Thank you again. One big round of applause. I need that back.
Thanks, Nicolai.
Thank you.